Okay, I'll start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting the Asian session live market analysis and the forecast for the week 18 to 22nd of January. Here on 18th of January, the week beginning time, between 5 and 5:30 GMT, I'll try to explain to you what could be the possible moves in this week based on my forecast algorithm. A session-wise moves we could be able to see. Followed by that, I'll explain to you the market reading strategy, how exactly we can do it by noting down the initial lows and the highs on a daily basis. And in the event if the forecast goes wrong, then there's no point in blaming that the forecast has gone wrong. Instead, we should be in a position to earn money from the market and also using our trading strategy. I will explain to you how, in a very simplified form, we can use the hedging as either way trading strategy. My contact details are given here. This is my email ID, dr@i-knowindices.com, and Skype chat ID is iknowindices@hotmail.com. Then website is iknowindices.com. So we will go to the details. So the derived forecast I'll explain to you. Afterwards, I'll explain the market reading and the trading strategy. This is the slide showing the expected market moves for this particular week. And it is the third week of January. We have come almost closer to that of the yearly trend reversal time. So the yearly trend reversals time started by early part of December, and it will prevail till this week. And afterwards, you come across the monthly trend reversal time in between the month of January and February. The market is expected to be volatile during that particular period. So during that of the trend reversal, they will make aggressive drop and suddenly reverse and start making aggressive gains. And once you think that, okay, gaining is going to happen and try to take a buy and sell, you will find suddenly they will make a drop. This sort of moves, unpredictable moves, they are expected to make during the month of the December and January, because that happens to be the yearly trend reversal. What is the meaning of yearly trend reversal? By end of the year, they just try to wind up their positions and lighten their positions and convert the investment in the form of profit. And once the profit is accumulated, then for the year ending, they have the amorphous profit for sharing with specific people. Then subsequently, they need to take the positions fresh in order to earn money again for the coming year or this year. So what they do is they continue to make the drop in the market and say that investors are going away from the market and there is no investment climate in the market, and world over you come across so many problems. That is how they talk. And in that process, when the market drops, then the people will become bearish and start making sell and buy trades. So once they start making sell and buy trade, then the players are the one who buy it. So during such drops, nobody questions, okay, when the market is dropping, it is bearish, fine, but who is buying in such a market? The sellers are buying, or it is a fresh buy which is happening in the market? So if you carefully observe it, we'll come across that the players make some extreme moves in order to induce the short sellers. One of the typical examples will be Canadian dollar. USD CAD from that of 1.40, people thought that, okay, it has reached all-time high, so they started making sell positions. So every 100, 150 pips, they started making the sell. But the players found that the predominant of the traders are sellers, and nobody is interested to buy at the highest level for the season. So when all turned sellers, the players continuously gained the level now to that of 1.46, about 100 pips. They gained the level. So Obviously, those who have gone short have to go in for a short covering because of the margin pressure. So turn, once they close their short selling positions by making a buy at the highest level and turn long during the small dip. Now, after forming 1.46 as the high, they simply dropped it to 1.45. So, inducing the traders to buy. Then they will come to 1.44. Then they will come to 1.43. Like that, they simply, in an unassuming way, trap the traders. So, similarly, in the case of GBP also, from 1.46, they dropped to 4.5, then 4.4, then 4.3. Then on Friday, they dropped to 1.42. Whereas Euro was holding it because they wanted to gain levels in the case of Euro GBP, the European major cross, where the peak value is very high and so almost double. So in such a scenario, what they had done, they did not drop Euro and dropped GBP. As a result, Euro GBP cross continued to gain. Similarly, when USD CAD was gaining, they hold and gained the levels in the case of Euro. Because of that Euro CAD, which is one of the prominent currency traded by that of the cross, traded by that of the small traders and also medium level traders. So they gained aggressive levels there. And they also made the drop in the case of USD yen as well as GBP, which is a contrarian move. By making a drop of that nature, they massively made a drop in the case of GBP yen. So you find now again they started gaining the levels in the case of USD yen and GBP. So this is how they make such contrarian moves in the market and induce the traders to liquidate the long position after the drop. And when they turn sellers, they gain the levels and trap them. Similarly, when the traders think that it is the high for the season and continue to take sell positions, they immediately make further rise and induce all the short sellers to do the short covering. So alternatively, you find the players are here to create the market sentiment and act against that of the traders. So let us see what they are expected to do during this week. This is based on the algorithm and market is most likely to follow this. And 18th today, they are expected to make a dip and firm up move during that of the Japanese session and continue to gain the level during the European session and start making the slide during that of the US session. So try to do only the swing trade and don't do sell and buy trade in the case of numerator currencies and also in the case of the denominator currencies like USDN and USD CHF. USD CAD alone you can do sell and buy trade, and the numerator currencies like Euro, GBP and Australian dollar you have to do buy and sell trade, and also in the case of USDN and USD CHF. So carefully watch and try to take positions according to that type of moves they are expected to make in the market. Then tomorrow, 19th, they are expected to make the swing and slide during the Japanese session and start slowly gaining the levels during European and US session. Then 20th, midweek, they are expected to make the rise during Japanese and the US session and slide during the European session. So you find invariably they are expected to make either way swings and then suddenly could come across the slide during the Japanese session on Thursday and then start gaining the levels continuously. And also for weekend, they are expected to make the rise and then quickly gain the levels during the European session and slide to confuse the traders. Then during that of the US session, they are expected to make swing and rise. So these swing and rise, they could make aggressive gaining moves during that of the US sessions. So be careful and don't become bearish just because they made the massive drop in the case of GBP. They create such moves in the market in order to induce the traders to become short sellers and bearish. So which I explained many times and demonstrated to you beforehand in several years during the past. Every time the year beginning, they will make such volatile moves and later on you will find that they are simply reversing the market in an unassuming way. Now, with regard to the levels in which they are expected to swing, they could make a small dip to that of 1.0850 and then start gaining the level slowly. In the case of GBP, they made the drop of about 300 pips last week and they are expected to gain back the level suddenly and reverse Euro GBP cross. And during that reversal, traders might take buy positions in Euro GBP, but they are expected to gain more levels in GBP and less level in the case of Euro. And as a result, you will find Euro GBP cross is expected to drop or lose levels. So be careful, and they are expected to handle the crosses in all the 4 weeks of this month. So this is the third week of the month. So they will continue to handle the crosses. And finally, the next week, they will handle the majors in a very big way. And also, they will try to go in for the monthly trend reversal at that time between the January and February. Then in the case of yen, every time they are going below that of 117 in order to induce the traders to liquidate the long positions, and afterwards they are holding 117 area and they are expected to gain the levels along with that of GBP. Watch it carefully using the net change. Then you will be able to understand what they intend to do with regard to the yen, and accordingly you take buy positions and book profit. Then in the case of CHF, they had made the drop and then subsequently they are expected to continue to gain the levels in the case of CHF along with that of GBP, so that GBP CHF, which is one of the hot cross, they will be able to gain the levels. Then in the case of Canadian dollar, after gaining massively the levels in order to create the bearish field, and also in the case of Canadian dollar, the volume is relatively very thin. That is why they make such aggressive moves in the market to create the market sentiment, and they will simply say that it is due to oil influence, etc., and then suddenly reverse everything and making everybody a fool, those who trusted the market sentiments. Then later on, we'll find they are expected to drop USD CAD in a big way continuously and come to that of 1.42 and then drop to 1.40, and ultimately they could bring in the reversal at 1.37. Then in the case of Australian dollar, and if you refer to that of the earlier years, that's about 4 years back, we came across USD CAD going up to 1.40 and making a massive drop to 0.99 as one-sided move. And so they are capable of making such moves, and don't think that once they made some extreme moves during the year beginning, and they will be making swings in the market. But when they make such extreme moves, the opposite one-sided move they will start making continuously. Then in the case of Australian dollar also, they are expected to continuously gain the levels and they could go above 1.70 and more. Okay. Grace has got a question. What is your take on New Zealand dollar and Australian New Zealand? What is about Euro GBP? Okay, as far as New Zealand dollar is concerned, which is expected to move in tandem with that of Australian dollar with a little bit of swings on upside. So sometimes you might come across New Zealand dollar gaining first, later on Australian dollar to gain. And certain other times Australian dollar to gain first and later on New Zealand dollar will gain. This way they handle Aussie New Zealand dollar cross up and down. So which you'll come across a wide range swing. As far as New Zealand dollar is concerned, initially they will just lag behind New Zealand dollar, gain the levels in the case of Australian dollar. As you see, every week beginning, they quickly gain the levels in the case of Australian dollar to start with, and later on New Zealand dollar will also gain the levels. So they are expected to reverse and go up from this week. And this being the trend reversal time, so they could make such extreme moves anytime, but most of the extreme moves are over by last week. The mid-month, they normally bring in the trend reversal during the yearly trend reversal moves. Then in the case of Euro GBP, again, they are expected to make the reversal from now, and suddenly you'll come across Euro GBP started making the downward move. Euro GBP cross. Now, let us do the market reading. Euro formed the initial low at 1.0895, and you find that they breached the low and come below to that of 1.0887 and holding it below that of 1.0895 for 2 hours. And 3:30 GMT, I noted down, it is almost around 5:30 GMT. They are holding it below that of the initial low for 2 hours in order to gain the levels. And in the case of GBP, 1.4252, they are not breached, and 1.4275, they just breached the higher side and went up to 1.4282, indicating, and also they are holding around 1.4279 above that of the initial high. So they intend to gain the level first in the case of GBP, followed by that they could oscillate and they'll consolidate around the lower level in the case of Euro, and later on they will gain the level. And both they are expected to make the slide during the US session. Always keep in mind that they don't make similar moves for more than 2 sessions. Always they make the reversal, extended move, and followed by that the intentional move. Then in the case of yen, 116.73. is the low, which they are not breached it. 117.36 also they are not breached. They are simply making the holding of the currency, slowly gaining the level. So they wanted to initially gain the level in the case of Aussie, followed by that GBP, and later on Euro. And then you'll find USD and USD CHF are expected to hold slowly and then gain the levels. See, now you can see that GBP, they are gaining the level as well as USD CHF. That is why they handle GBP CHF cross on the upside. Then USD CAD 1.4527 is the initial low. They just breached and gone below to 1.4508 and holding below that of 1.4527. So, which clearly indicates that they made an extended upward stop into 1.46, dropped it to 1.45, and they are likely to breach 1.45 and go to 1.44, so that they will induce the traders that the earlier resistance turns support, and then the traders will try to buy and later on see that they did not give the profit booking opportunity. As a result, they have to liquidate. Then they realize that they bought it high. Then Australian dollar 68.38 is the low, which is not being breached, and 68.95 is the high. They just breached the high and went up to 69.27 and holding above that of 69 now. 68.95, the initial high, they breached and holding above there for more than 2 hours, indicating their commodity is to reverse first. Then later on, they are expected to gain the levels in the case of GBP, followed by that of Euro. And also they are expected to gain the levels in the case of USD CHF by holding Euro nominally, so that CHF they will gain along with it of USD GBP, and also slowly gain the level in the case of USD yen, so that all the GBP crosses will show the gaining moves. So with regard to the trade recommendations, so near that of the new low 1.0890, I intend to take a buy with a buy limit. Probably before making further rise, they could make a small dip of 3-4 pips. At that time, it will get filled. Then 30 pips above, you can keep the exit or take profit order, and 30 pips below, you can keep the hedge order. And what you can do is, once the position start making profit of 20-25 pips, you can keep stop at entry and remove the hedge order and slowly move away the take profit order on the upside. and use a trailing stop in a profit making buy position, so that in between the trailing stop and the new take profit order, the market will be making swings. So it may hit either the trailing stop or that of the take profit order during some small swings. So we can keep away the exit order about 20-25 pips away from the other market, and the trailing stop about 15 pips or 20 pips away from the other market. Thereby you will find you should be in a position to maximize the profit. Once they gain more level, you will take the advantage of it. And at the same time, if they suddenly reverse, your trailing stop will protect your profit. So that a profit making position again will not become loss making position. Many of the traders, they lose such opportunities. When the profit is seen, they fail to book profit and suddenly the market reverses, and then they find that the position is making loss and they cut loss. And then the next time when they take the position, in a hurry they grab the profit of 5-10 pips. They do not have the patience to wait, because the past experience says that if you wait and suddenly the position might incur loss, then you might lose the profit. So instead, what they see is simply grab it. So instead of that, you can keep stop at entry, and there is no emotion attached to that, and you keep the trailing take profit order, trailing stop order, so that in between these two orders, the market will be making swing. When they gain more levels, automatically the trailing stop will also move up, and you can manually move the exit order also. Thereby, you will be able to maximize the profit. So try to do that so that you will not get caught vulnerably. At the same time, you will be able to maximize the profit. See, your trading strategy does not stop with that of using a stop simply to limit the risk. Maximizing the profit is also part of the trading strategy. So if you maximize the profit so that in lesser trades, you will be able to earn maximum from that other market, so that you take lesser risk and earn more money. So that way you will be able to inculcate a patient method of trading. So as I have been telling all the time, that market rewards patience and not impulsiveness and not crisis management. So it waits for the people to develop their impulsiveness, and then once the traders make distress trade based on impulsive conditions, the market start giving profit to that of those who are doing trades with utmost patience. So by losing your patience, you become impulsive and you become emotional. Your endocrine system is triggered. Unnecessarily, your blood pressure goes up, and because of that, your health condition deteriorates. And the main objective is to earn money. In the process, you become a restless personality. So don't make you the victim of the market. Instead, try to overcome such circumstances and try to conquer the market by using your common sense. Then USD yen, so 117.00, I just kept the buy limit order. If they hit it, fine, make a small dip, and then you can keep hedge order to limit the risk. In the event, if they suddenly hedged you, suppose you take a buy, then afterwards the market comes down, hit your hedge. So how to handle such situation? Because you should not think that I am holding a buy position as well as a sell position, so that I will simply book profit on the buy side as well as the sell side. Theoretically, it might be possible, but practically at every time you will have that uncertainty whether the market will go up first and then come down, or come down first and go up later. So in the process, what you have to do is, in the event if the position is hedged and the hedging start making loss for about 10 to 30 minutes, if you carefully observe by doing the trades in a demo trading platform, we'll be able to understand. Waiting for 30 minutes will give a clear-cut indication for you whether they wanted to make further drop or simply reverse after making a stop end. So if the hedge position is making loss for 30 minutes, that that gives the indication to us that the market has done the stop end before making an upward move. That condition, you close the hedge with a few pips loss, about 4 pips or 5 pips loss, and keep another hedge order 20-25 pips below and limit the risk. And once they start gaining it, you move the hedge order upward to that of the original hedged level, so that you are not hedged, but you will have only the hedge order working for you to limit the risk. And once the market goes about 117, another 10-15 pips, you can keep stop at entry in the buy limit, buy position, and remove the hedge order. Then the purpose of using the hedging is over. So in a loss making position, we use the hedge order to limit the risk. In a profit making position, we use the trailing stop to earn either a minimum profit and use the take profit order, a trailing take profit order, so that we'll be able to maximize the profit. So this is the trading strategy. You could use it. There are other trading strategies, but this is the simplest method of trading. You can use it. Thereby, you will be able to really earn from the market. And also keep in mind that they handle the majors during the early and the late sessions. So if you are taking positions in the case of majors, wait for these sessions to come and then take positions. So the timings are also given here. Make a note of the timings, and during such time, if we will be able to see really how they are handling the majors, followed by the cross and again the majors. So that is why I always say, if you are trading in majors within the session, you enter into a position during the early part of the session, you should be able to exit with profit during the late part of the position. Again, you can enter position during the early part of the European session and book profit during the late session, and also during the US session, if you are able to watch the market all the 3 sessions. Otherwise, restrict to 2 sessions and follow those 2 sessions carefully, and also make a note of what the session-wise moves are to be based on the session-wise forecast, what I have given it here. So you can find, okay, they are going to rise during the European session and then later on slide. So you try to take a buy during the small dip during start of the European session, book profit during the rise and take sell position. And when they make a slide, you book profit during the US session. So that way you can try to do the trades following the session timings. These session timings, if you watch carefully, you will understand how precisely the players are using it. And in order to confuse the traders not to follow these timings, they simply divided the market as Asian session, then European session, UK session, then New York session, Pacific session, like that. So this is mainly to confuse the traders, because they talk in Latin and they do not want anybody to follow that Latin. Instead, they tell English is the language to be followed. So all follow the English language and find that they are not able to earn money from that other market, because the players in a consortium use the language of Latin. And so we need to read their intentions by following their sign language. Then we will be able to trade at ease without any difficulty. So coming Friday, I got some engagement. I need to go for a meeting. So I'll not be able to present the Asian session webinar on Friday, a review of that forecast, what I have given it. So I'll come back on 25th of January. That will be the last week of the month of January. We'll come across the yearly trend reversal getting over, and the monthly trend reversal is going to start. And when 2 trend reversals are going to clash, it is very similar to the first week of December. They are expected to make very aggressive moves during that time and suddenly start gaining the levels in the case of Euro and GBP, and also in the case of USD and USD CHF, in order to confuse the traders as a contrarian move. And during that process, USD CAD is expected to make a drop, and Australian dollar is is expected to gain massively, and that will give a mixed reaction to the traders, similar to the type of mixed reaction they are giving it by making contrarian moves. So the players are here to make money from the traders and the institutions who do emotional trading. So even though the fund managers say that I am an MBA and I have got a highly qualified degrees in finance, etc., but if he fails to control his emotions and fail to understand the common thinking and common sense line which is working in the market. It is not the simple moving average line. It is a common sense line which is working in the market. They need to understand in order to become successful fund managers. So I take this opportunity to thank FX Trade for the facilities provided. Okay. I take this opportunity to thank FX Trade for the facilities provided to present the webinar. And you people, wish you all very happy trading, and always see that you are not emotionally entangled in the market, and always use the common sense whether what you are doing is right, and don't become impulsive trader or a scalper, and that will only spoil your health. And you be a calm trader, and definitely you will earn successfully money from the market. Wish you all happy trading. See you on next Monday.